Welcome to forexfilms. Today is Thursday, June the 9th, 2011. And we've had a pretty interesting day today with ECB rate decision. They, of course, left rates the same, but instead of being super hawkish like many people were thinking, Trichet really had the only words that were inflammatory, and he used vigilance, and that makes us think it's less likely that we will have a rate increase in July. So we had a head and shoulders pattern here, and we broke through that, but most of the turn came above that, and we've come back down into support and bounced back. Now, what you can see here is the 145 level provided the support, along with it being the 50% retracement of the downward move that a lot of people think is a major reversal, but think is still in question. Now, looking forward to tomorrow, it is more likely that we will have continuation as our trend since Tuesday has been to the downside, and we're very unlikely to see a reversal on Friday. So where can we look for support from the euro? We obviously still have the 145 region, but when you have a candle with a long wick like this and then something that's pretty full-bodied and closes near the bottom of its range, then you're more likely to make a new low. So what we're looking at here is like 44.50 down to 44.30, which of this entire rise is about the 38.2% retracement area. So it's a pretty common level to turn around at, and I think we have a good chance of continuing to the upside after that. In the morning, we actually have at 0200 Eastern Daylight Time German Consumer Price Index, which could have a big move on the market. We might consolidate into a fourth wave until German CPI comes out and then drop lower. Then I would look for signs that I want to be a buyer. We will also, I think it's about 44.50, but on the daily chart, or looks like 44.60 now, could touch this 13-period EMA, which I like to watch. A lot of times we may go down a little bit under that, which could get us to 44.30 to 44.50. And then I would look for continuation to the upside. Here is a 1-hour chart of the dollar Swiss. We had a lot of consolidation here, and we broke out quite strongly to the upside, which is dollar positive. Now it looks like this is wave A, then this congestive pattern is wave B, and then I think this would be 1, 2, 3 of C, and then have another high. We may not go any higher than 84.50, but I don't really want to play this long. I would rather look for a chance to get short. And another reason for looking for continued dollar bearishness is due to seeming corrective patterns in the markets in different currency pairs. So I think we could get another high here, like 84.50. Then I want to sell this and look closer to 82.50 for a final buy-in. And I think because of how overextended the Swiss franc is, and because of where it's gone in the last 40 years, I think it would be very very good to buy this pair once it makes it down there. Now we have the New Zealand dollar, US dollar currency pair. This is a 15-minute chart. Now, we went up really fast after the Reserve Bank of New Zealand interest rate decision, not because of a raise in interest rates, but due to a hawkish tone. And just today, right before we had this drop-off, the New Zealand Reserve Bank of New Zealand governor said that he thought the market was overly bullish about his comments, so that really doesn't speak well for your own currency. And there's been lots of comments that the New Zealand dollar is overvalued for quite a while. That being the case, I got short in this at near this top this morning, so I'm barely in the money and really not going too much farther down. I'd probably like to get out of this so I could get in a better pair for the upside, such as Euro or Swiss franc. Though there are other likely contenders, such as the Australian dollar. We had some major moves down and then a lot of congestion, and we haven't really been able to go very far, mostly because we've hit likely support and a good Fibbo level here is 61.8. I think this will probably follow other currencies a little bit lower, and then an excellent buy-in for hopefully another 700 pips to another final all-time high before we have a true US dollar reversal. So looking at this as wave 1, A, B, and C, and probably one more low, like 105.50. And British pound. We actually have quite a bit of UK data coming out tomorrow. We have a GDP estimate with no specific scheduled time, but at 04:30 Eastern Daylight Time we have industrial production, manufacturing production, and producer price index all coming out, and those are all pretty much medium volatility news, but we've been in congestion for a few days now, and we're just waiting for a breakout. We're actually kind of at the bottom of the range right now, and this is looking to me like a B wave, and if this continues to make this sort of curve pattern to the upside here, I would definitely expect it to go to the upside, but this still looks like we could have another drop, maybe an equal leg to this. However, I don't think that would even be continuation really to the downside, except for temporarily. I think we could still go higher. In fact, I would be pretty surprised if we did not continue higher after either tonight or a correction tomorrow. So these are all good pairs to trade. Keep your eye on them, especially the Euro and Swiss franc. Australian dollar should be another big mover after it's moved down, that is, playing to the upside. So thanks for watching. I appreciate any comments, questions, and I will see you in the morning.